you are living the UK permanently, then it's necessary to take the necessary steps to ensure that you are not hit by a huge tax bill years after you have left the UK. And so in this video, I'll be providing you with the steps required in terms of your tax, your national insurance, and your pension. If this is your first time here, my name is Amma, a chartered accountant and a tax professional from AB & Co Accounting and Tax Services. On this channel, we cover topics around legal ways you can use to reduce your tax, how to manage your finances in a way that will help you keep more of your hard-earned money in your pocket, and accounting issues in general. This is for educational purposes only. For personal tailored advice, please contact us. So the first thing you need to do is to complete Form P85 if you don't complete self-assessment, and then send it to HMRC. This will tell HMRC about your total income and tax that you have paid in the tax year. And if you're due a refund, HMRC will pay the refund to you or to the nominated individual. However, if you are owing additional tax, you have to pay this tax before the due date. On the other hand, if you complete self-assessment, then you have to complete the residence session using Form SA-109 and then post it to HMRC. Please note, you can't complete this using HMRC's online system. If you want to submit it online, then you need to buy a commercial tax software or hire an accountant to do it for you. You can contact us to help you with this. Once you have left the UK and have become a non-UK resident, you will not pay any UK tax on your overseas gain or income. However, if you have UK-based income, such as a rental property, you still need to continue with your self-assessment tax return. Each tax year, you receive a rental income to HMRC. If you receive any other income from the UK, such as interest or dividend, or even both, you don't need to pay UK tax on these because these income are classed as disregarded income, provided you stay as a non-UK resident. However, if you return to the UK and become a UK resident within 5 years, tax on these become taxable immediately in the UK. So please take note of this. This is the first thing you need to do to make sure you are not hit by any tax bill after you have left the UK. The second thing you need to ensure you have in place is checking if you will be able to continue to make voluntary national insurance contributions. You will be able to make voluntary national insurance contributions as long as either of these apply to you. That is, if you have previously lived in the UK for 3 years in a row, or paid contributions or had Class 2 contributions treated as having been paid for at least 3 years. Making voluntary national insurance contributions is necessary for your state pension. If you want to receive state pension from the UK, then you need to ensure you check this before you leave to put the right things in place to benefit from state pension. The last thing you need to check before you leave the UK is about pension. If you have private pension, you'll be able to receive it in any country that you are, but you need to speak to the provider before you leave. Some providers are able to pay you in any country that you are. Some providers will only be able to pay you in the UK's bank account. So you need to have this conversation with the provider to help you prepare better for the future. So these are the steps you need to take before you leave the UK. I hope you have found this video useful. Please subscribe to our channel. Thank you for watching and see you soon.